This video is sponsored by investing.com. So, we had a chat within the team the other day and we were thinking of stock exchanges across the world. How many can you actually name? Because seriously, when we tried it, off the top of our heads we could name, the New York Stock Exchange, Nasdaq, the London Stock Exchange, and well, because I live here in Germany, the Frankfurter Börse. And that's probably a similar number to most people watching this channel. But the thing is, if we zoom out and look at Europe, did you know we actually have more than 30 different stock exchanges? 30, spread across cities like Dublin, Paris, Milan, and Bucharest. And yet, despite having so many exchanges, not a single European one ranks in the global top 3 by market capitalization. Meanwhile, the United States, of course, dominates with just 2 giants, the New York Stock Exchange and Nasdaq. And together, they host companies worth over $80 trillion. That really is an unimaginable concentration of financial power. And this really is not good for Europe. Because when companies succeed, when they innovate, scale, and become global players, the financial rewards often don't stay in Europe. Instead, many of our most successful companies choose to list in the United States. Take Spotify. Founded in Sweden, it is one of Europe's greatest tech triumphs. And when it was time to go public, they had a choice. Listed on the Nasdaq Nordic in Sweden, or maybe the Deutsche Börse in Germany. Or head across the Atlantic to the New York Stock Exchange in, New York City. And to be honest, it wasn't a difficult decision. The New York Stock Exchange simply dwarfs our domestic alternatives. In the New York Stock Exchange, there are simply way more buyers and sellers, more experts watching the stocks, and more massive investors ready to spend. This likely means a much higher valuation for Spotify. And it's also just much easier to sell billions of dollars in shares there than it is back at home. And they aren't the only company. Over the last decade, 130 European companies have migrated their primary listings to the US. And our savings here in Europe have followed our companies. According to the European Commission, roughly 300 billion euros in European savings flow to the US every year. We are essentially exporting our wealth because we lack a unified way to invest it at home. Now, fixing this at the continental level means moving towards a true European capital market, and maybe even a European stock exchange that can compete with the Nasdaq. But we will come to that in a moment, because there is something you can do yourself to try and reverse the trend. For example, shifting some of your portfolio away from US tech and back into European players at home. And yeah, I've actually started doing this, but it is obviously not as easy as it looks. And one tool I really like is InvestingPro. It's the flagship product of investing.com. And one really cool feature is ProPix AI, which is a great place to start, as the AI scans loads and loads of data and figures out certain strategies. And if we look at Germany, because that's where I live, you can then see some of the strategies for Germany. I'll choose Alpha Germany Select, and you can see how it's outperforming the DAX index by quite a lot. And then you can add these stocks right to your watch list. And this is really cool because this watch list shows you so much information about all of these stocks. I mean, for example, if I scroll down a little bit, you can find SAP here, for example. I actually bought this the other day. And you can see the fair value label of undervalued with a potential upside of 25%, which obviously sounds pretty good. If we go into the stock, you can then see why it has this upside potential, right? I mean, there's financial models right here. And you also have a company profile here with some of the highlights or overview information, really. And there's also financial health and a lot more information, which really gives you a great overview of whether you should invest or not. So it's a really cool tool. And if you're interested, they have a sale until the 23rd of April, where you get 55% off, plus another 15% with my code EUmadesimple. So for a good portfolio, make sure you check it out. Link in the description below. Back to the video. As we've seen, our fragmented national markets are a huge reason why our best companies and our capital keep fleeing to the US. But there's another problem: foreign investment. Imagine you are a massive fund in Tokyo or New York. Are you really going to jump through the hoops of the Warsaw Stock Exchange just to buy shares in a single Polish company? Probably not. Big money really needs scale. It needs deep, liquid markets where millions of euros can be traded without sending prices swinging wildly. And right now, Europe is so fragmented that we simply don't have that one big door for the world to enter through. Or do we? Because let's have a look at that list of global exchanges again. And you probably noticed before, right there at number 5, sitting just behind the US and China and Japan, is Euronext. Euronext isn't just another stock exchange. It's basically a federal stock market. Think of it as the European Union of finance. Over the past 2 decades, Euronext has acquired the national exchanges of Paris, Amsterdam, Lisbon, Brussels, Dublin, Oslo, and Milan. And in 2025, they went even further, acquiring the Athens Stock Exchange and pulling Greece into their network. But here's what makes this model so interesting. Euronext does not erase national markets. It simply connects them. Each exchange keeps its local identity and expertise, but they all operate on one common trading technology, one common data infrastructure, and one common rulebook, at least to some extent. In other words, a shared financial system across borders. And meanwhile, local exchanges such as Euronext Amsterdam, Euronext Paris, or Borsa Italiana still exist and remain important, because this is where domestic companies list their shares, where IPOs still happen, and also where local financial expertise is based. But as impressive as Euronext is, it is still missing some massive pieces of the puzzle. And you can probably guess what. Spain, Poland, but yeah, most importantly, Germany. The Deutsche Börse in Frankfurt is the heavyweight champion of Europe. And for decades, the story has been very similar. Frankfurt doesn't really want to join the club. And every time there was an attempt to create a super exchange, it pretty much crashed and burned. And part of the problem here is national pride. If French and German exchanges merge, who gets the headquarters? Frankfurt, Paris, or Amsterdam? And while that might sound a little symbolic, the location of the financial control center really does matter for influence, jobs, and strategic sovereignty. There's also some economic concerns, because Deutsche Börse is a powerful global brand already, and it's also a large and complex organization with around 16,000 employees. And this makes integration expensive, politically sensitive, especially if jobs are cut after consolidation. Then there's also the competition question. A single European exchange could reduce rivalry within Europe, particularly in areas like derivatives trading, clearing, and market data. And the European Commission has already blocked major exchange mergers in the past. Let's just go back to 2012, where it prohibited a merger between Deutsche Börse and the New York Stock Exchange Euronext. And in 2017, where it blocked a merger between Deutsche Börse and London Stock Exchange Group. Now, I personally really like these decisions because I don't really want non-EU countries dominating Europe's financial markets. But the Commission's reasoning really wasn't geographical. It was about preventing excessive market concentration in critical areas like derivatives trading and clearing structures. And those same competition concerns could potentially also apply to a future merger between Euronext and Frankfurt. So yeah, in other words, merging Europe's exchanges is not just a technical step. It's a political decision about who really leads Europe's financial future. This is what I think. We really need a centralized European capital market to compete with the Americans across the Atlantic. And to be honest, this makes absolute sense. And right now, like so much here in Europe, our capital markets are just very fragmented. Just imagine the disadvantage you have in terms of available capital if you're listed on the Ljubljana Stock Exchange compared to the US one. It just isn't fair. And it's very understandable why companies look over across the Atlantic when they want to raise large amounts of capital. And this really does once again weaken Europe. And Euronext, I think, is a great start. But we need to bring Frankfurt and Euronext together, potentially a merger to create a true European heavyweight. And the benefits would be enormous. Just think about it. Fewer European companies would feel the need to leave. Also, Europe would have the financial infrastructure needed to support common safe assets like Eurobonds, in the future of course. And deeper capital markets could also help build stronger private pension systems, giving Europeans better long-term investment opportunities. The great thing is, things might be moving forward, because in October last year, Friedrich Merz, the German chancellor of all people, called for the creation of a unified stock exchange. Love him, hate him, but as a former BlackRock executive, he probably understands global capital markets better than most other politicians. So yeah, political interest is growing. Finally. Thank you so much for watching. And one last thing before you go. If today's video made you want to actually act on this and start building a stronger European portfolio, InvestingPro is genuinely where I would start. You can find undervalued European stocks, run fair value checks, and filter by country or sector in just a few clicks. The sale is only for a very limited time. 55% off plus an extra 15% with my code EUmadesimple. The link is in the description below. And as always, thank you to all of our members and patrons who keep this channel going. See you in the next video.